On Tuesday, the stock market was boosted by a ceasefire in the Middle East, easing tensions. Market sentiment received a significant boost. All three major indices closed higher. The strong momentum from Monday continued. The market broke through a short-term range. It reached a new high since April this year, making a fresh rebound peak. Let's review this conflict. Why did they choose to ceasefire at this point? The timing of the ceasefire benefits both sides. For Israel, they couldn't bear further losses. For Israel, the losses had become unsustainable. To be honest, the airstrike on June 13th was technically a great success. It took out over 20 senior Iranian officials and scientists. This was one of the rare collective decapitation operations in warfare history. However, the issue was a strategic miscalculation. It was a severe misstep. After days of fighting, Israel couldn't hold on much longer. For Iran, this is indeed the best time to ceasefire. Why is that? Because as it stands, while Iran continues to retaliate, it's unclear how long they can sustain it. How long can they keep it up? It's uncertain. Iran does have a stockpile of 2,000 missiles, but the problem is whether missile production can keep up with the consumption rate. Even with the same type of missile, it's not entirely domestically produced. Some of the gyroscopes and electronic components still depend on imports. At present, Iran has already fired 19 rounds. At this consumption rate, Iran may run out of missiles by mid-July. They might deplete their stockpile. Therefore, it would be a good choice to end the war while they still have deterrence. Now is a good time to do so. It's a right opportunity. Politicians may end the war, but the hatred brought by war won't disappear just because of a ceasefire. The hatred remains, thus the market still worries about the future. After this ceasefire, will Iran and Israel use this time to regroup and reignite the conflict? This concern is possible. However, we won't make a final judgment. At least for now, their ceasefire is in their best interest. This time is the most favorable for them. So short-term conflict is unlikely. This is a positive signal for the market. Thus, the market maintained a strong stance from Monday to Tuesday. Both days saw a solid and positive market trend. Let's review and analyze the three major indices. First, let's look at the S&P 500. The current situation of the S&P 500 is very close to hitting a new all-time high. It's just a step away from breaking through. A small upward move could push it past the previous high. However, on Tuesday, this did not happen. There is no momentum to break the high. This suggests that at this point, there are still some funds sitting on the sidelines. This movement is quite interesting. At this point, there's a clear power struggle in the market. Both sides are competing for dominance. There are those who are bullish and are very optimistic. They believe that in the short term, the S&P 500 has a high probability of breaking the previous high. This could bring more positive signals to the market and boost market sentiment. However, at the same time, there are more cautious investors who see it approaching the previous high before the break. They worry it may fail to break and could be nearing the top. This could be a temporary peak. So at this moment, they remain pessimistic. There's also a portion of investors who are currently waiting on the sidelines. They're waiting for the market to break the previous high. That level is 6,147.43. Once that level is broken, they plan to enter the market. These investors are still waiting. They haven't yet participated. Overall, those with a bullish outlook currently have the advantage. From the candlestick patterns, we can sense this. On Tuesday, it broke through a short-term top. Especially from a technical perspective, there were clear signs of weakness. However, the market strongly recovered at this point, repairing the technical situation. The MACD indicator here clearly shows weakening momentum. This suggests that short selling momentum is dominating. However, over the past 2 days, we've observed that short selling momentum is gradually shrinking. If a golden cross forms here, it will strengthen the technical outlook. It would signal a recovery. This would create a stronger signal. As long as the golden cross occurs above the zero line, once it breaks through, it will continue the upward momentum. Even if it pulls back later, pullbacks confirming the move will still provide a strong buying signal. It would indicate positive market sentiment because it would mean breaking a key resistance level. Once that resistance is broken, it will form a solid support. Technically speaking, this support will be quite effective. After the breakout, even if there's a pullback, it won't cause a market reversal. Instead, it will likely attract a strong follow through. This will trigger significant buying signals. So the market is waiting for the breakout at this point. Once it breaks through, there will be many opportunities. After the breakout, a short-term pullback would be normal, but there will be support during the pullback. This will favor its future price movement. The market will certainly lean more towards a bullish outlook because technically the outlook has significantly improved. Now let's take a look at the S&P 500 futures index. What's the situation there? Regarding the futures index, the current situation still shows resistance at the previous high levels. When it reached this new high, the price action clearly encountered resistance. It started to hesitate. It didn't immediately push higher. Instead, it consolidated here. This consolidation is quite reasonable. Why do I say this? At this point, the market chooses not to break through immediately, fearing a potential sell-off. So before breaking through, it shows consolidation at high levels. This tests the market's reaction. It's nearing the previous high, and the market might bring heavy selling pressure. This explains why it's consolidating here, showing sideways movement. Sideways consolidation let us feel the strength of the market. As it approaches the previous high, if the concerned funds choose to sell here, how strong will that selling pressure be? If it's not significant, this could create a better atmosphere for a breakout. It will indicate a positive mindset for a bullish breakout, and we will clearly see the market strength at this point. No sell-off indicates it's not weak, so it's not weak. This is a testing phase, so waiting at this moment for the market's decision is a good choice. The upcoming breakout will lay the foundation. So the consolidation here is very reasonable. It aligns with market logic. This consolidation is very logical in the market. It's completely in line with market logic. As long as it consolidates sideways here and there's no significant sell-off, it indicates that the pressure here is not strong. This suggests that the probability of further upward movement is higher. For the bulls, this is a positive signal. Now let's review. Over the past 2 days, all three major indices have shown strong upward movement. In this context, most stocks in the market have performed well. However, we observed that one of the tech giants didn't perform as strongly as expected. Their gains were not particularly impressive. For example, on Tuesday, with the market opening strong and maintaining strong momentum, some of the tech giants performed relatively poorly. Take Amazon for example, its gains were not particularly large. Nvidia also saw a gain of less than 3%. Moreover, Tesla and Apple actually chose to pull back or decline despite the favorable market conditions. This indicates some weakness within the sector. We shouldn't solely focus on tech stocks for investment. Although they have highly popularity and are highly scrutinized by the market, the reality is we've also noticed that other well-known stocks in the tech sector have shown strong performance. For example, Intel. At this point, Intel, I'd like to explain its situation in detail because right now it's clearly at a very critical level. This could present a good opportunity. Although Intel's overall situation does have some bearish factors at the moment, its chart remains strong. The price action isn't weak. In fact, it has been consolidating at lower levels. It has been oscillating for a while, but recently its situation has shown clear improvement. The moving average system has formed a clear convergence. After such prolonged consolidation at lower levels, it has reached a critical time window for a potential breakout. The consolidation phase hasn't been short. Its technical outlook has clearly improved. The moving averages have started to converge here. The convergence is tight. Different time frames of moving averages are crossing at this level. This has clearly reached a time window for potential change. Yesterday, taking advantage of the market sentiment, it rose by 6%. It broke through the support of the moving averages. This pressure has been overcome and is now holding above the moving averages. This marks a key shift in its technical position. In the short term, if it faces resistance at this level, if it can break through this level effectively, it will hold above the key moving averages. This would mark the beginning of a bullish trend. So in the near term, there's a clear signal that is worth considering for participation. Of course, this signal must wait until it breaks through the resistance level at this point. From the chart's perspective, it's approaching a very important time window for breakout. It has long been supported by the annual moving average. If you look at its stock price, it has been repeatedly suppressed by the annual moving average. Every time it reaches near the annual line, it shows a clear pullback. Recently, it has once again reached the resistance at the annual line. If it can break through the annual moving average this time, it will hold above the moving average system. This would mark the start of a bullish trend. So this opportunity is quite clear. This is a notable opportunity to watch, especially when you look at today's MACD indicator. It has shown a significant improvement. This is a daily chart's bullish momentum, which is gradually taking control. Meanwhile, the bearish momentum is gradually shrinking. If you look at the previous bearish area, the bearish momentum was quite strong, but now at this level, the bearish momentum has been largely exhausted. It has shrunk to a much smaller level. The bullish momentum is now taking the lead. So if the market chooses to move higher, especially if it breaks through the annual line and holds above it, this will definitely signal a significant upward move. Some professional institutions in the market have given their ratings for Intel. They believe that Intel's future price could reach $28. It could reach $28. So there's room for upside. On the downside, there's clear strong support, so strong support below and upside potential. So the current situation is definitely worth participating in. It's highly valuable. The potential is very high. So just wait for the signal. Once it breaks through the annual line, breaks the main resistance, and holds above it, it will be a clear bullish signal. At this point, this level can be seen as a central zone. From the perspective of the chain theory, this is a clear central zone. There has been a fierce tug of war between the bulls and bears here. If it breaks out to the upside, it will indicate that the bulls have won at this level. It would confirm a breakout from the bottom. It would mean breaking out of the central zone, then moving upwards. Even if there's a pullback along the way, it could form a reliable 3-buy signal. For example, the 3-buy signal could appear at this level. After breaking through the central zone, there would be a pullback, then a bottom formation pattern. This would be a very reliable buying opportunity, and it would be very safe. There would still be plenty of upside potential. So once it breaks out from this level, Intel's trend will shift significantly upward. The overall direction will improve greatly. So this is our brief interpretation of the market. If you have any other questions, feel free to leave a comment below.